Mark, what are stupid earnings?
I take issue with the title. First of all, how about what are earnings? Is a company making a profit? Are they making a loss? It's not actually an easy question to answer. So we have these generally accepted accounting principles, GAAP, which is the topic of this article, that attempted to standardize financial statements. So when you look at financial statements and you're, say, through your brokerage accounts.
Which I love that acronym, by the way.
GAAP.
Well, just because, okay, so these are generally accepted accounting principles.
That we're imposing on everybody, yeah.
But in what circumstances are they not accepted? Because
well, they might not be useful.
It's not universally accepted accounting principles. It's generally. So what are the situations where they're... I'm just making fun of the acronym because, okay, so they're generally accepted, but what about when they're not?
Well, suppose a company has a lot of deductions, adjustments that could distort the picture of core profitability. It might make... Remember we were talking earlier about getting at the trend in inflation, what's really going on with this? We talk a lot about trends here because we're dealing with variables that are easily measured.
And always evolving.
But not exactly. They're really noisy, and that's not just a casual term. That term noise means something. There's noise in GAAP reported earnings. Non-GAAP, the problem is they can exclude the noisy stuff, but non-GAAP is judgmental, meaning a firm can say, well, we expense this or that. That took away from our earnings, but we think that that's a good measure of core profitability. For example, we spent money on R&D, on branding, on human capital, which firms increasingly do. This can increase reported losses. So non-GAAP or pro forma, sometimes called pro forma earnings, will adjust for those things because firms think this is a better measure of underlying profitability. So non-GAAP earnings, like with GAAP earnings, they should be used with caution. They're not inherently bad. They are, however, chronically higher than GAAP earnings, which suggests that firms employ them only when it's favorable to do so. But like with any financial financial data, income statement, financial statement measure, it should be used with caution and probably with expert guidance. So I take issue with them. With the sort of negative connotation attached to non-GAAP. They can be useful if you know how to use them, non-GAAP earnings, that is.
And they can also, you have to, again, you say if you know how to use them, they can also be used for...
nefarious purposes.
Quite often is probably the wrong word, but when they are used with bad intentions... the result can be kind of catastrophic, as we've seen in a number of cases.
I mean, look at what they're taking out and ask why.
Yes.
Should they have left it in? If
right.
Is Oracle mentioned here? I'm sorry, I've read a couple of articles on this lately where Oracle has, Oracle is, you know what, I'm not even going to name them because a lot of firms do it.
You already did.
They consistently exclude, Tucker will edit that. Chuck, this isn't live.
Yeah.
This isn't
Tucker,
live.
can you put
Tucker's going to edit that out.
Tucker,
hit the delay button.
Yeah.
It's too late.
Could you all just forget I said that?
Is Oracle a four-letter word?
When a company consistently excludes something, that tells you, wait a minute, this isn't a one-off by definition.
Sure.
You should probably be suspicious of that, and a couple of examples are cited in the article. Like with anything, you got to know how to use it.